This one's going to be a little bit rowdy and a lot of opinions, but I feel like this is something that a lot of people need to hear. If we haven't met, by the way, my name is Chelsea Winstead. I am a home financing strategist and mortgage lender. Every single month, I talk to hundreds of people on this app and help them get through the process and create a strategy on buying homes. And I had a long conversation on the phone today with a friend, actually, not even a client, and we were talking about the reality of this. So let's just start with this. If you have friends or siblings or parents, or maybe you yourself bought during the pandemic era, okay, let's just start there. First of all, the reason that rates were dropped so low was because the world was like kind of sort of ending, or it most certainly felt like it, right? We had lots of people dying, right? We weren't going in public without shit on our face. Like, we could not go and do things. The economy was tanking. So therefore, rates plummeted to try to encourage spending so our economy did not completely go bust. So first of all, just keep this in mind, okay? Because I think that there's now this expectation, or now this is like a reference point that people have, is that, oh, well, you know, at one point rates were 2 and 3%. Right, when things were going really seriously wrong. Now, I will say this. Rates today, so just to like set the tone here, rates today between 6 and 7%, that's actually a super average number over the past like 50 years. So they're not extraordinarily high. However, what is painful is during the time in the world where rates plummeted, do you know what happened? Everybody started to increase their home prices. And the reason that happened was because there was a shortage in supply. People, like, homes weren't being built, right? The world was shut down. And so for people to be able to buy homes, what was happening is because there was such a limitation on what was available, people could raise the price, right? Have you price gouging, right? This is the thing. So all of a sudden, in those, like in that period of time where homes, you know, maybe a home started at $200,000, $250,000, within a 3 to 4 year span, that home could have jumped in value up to like $550,000, $600,000. Now, the specific appreciation obviously matters on where you live in the world or country. But the point being is that the thing that's really painful, and I think a lot of people just don't understand this, it's not the interest rate, it's the pricing. But here's the reality. The pricing is here to stay, you guys. There are no data points. Like, I do videos all the time on this. So if you're new to my page, welcome. I try to have clickbaity crap to get attention. So a lot of the time you see housing crashes coming, rates are going to be dropping dramatically. No, they literally get your attention and it works. And then you're fed more and more and more crap like that because the algorithm saw that you paid attention to that video and you kept watching. The reality is that in some places in the country, we are seeing price correction. So correction is probably anywhere from a 5 to a 15% decrease in the listing price. So yes, we are seeing some improvement with pricing, but we are not seeing a crash. Literally the only thing that would bring home prices back to where they were prior to the pandemic happening is literally something terrible, like the economy bottoming out, another massive pandemic happening. And there's a lot of really bad shit that goes along with those things. As of today, the knowledge that we have access to today, two things are quite clear. Number one, home prices are where they are. You may see some plateauing and a little bit of a trickle down, but the reality is that it's just quite frankly changed the landscape of what is required to buy today. A couple things that go along with that. So I would say probably 5-6 years ago, the amount of people who had 20% saved to put down on a home, that is a very different number than today. Today, because home prices are more expensive, it's not that people cannot get into a house. It is that now you are probably going to be paying less of a down payment and having to finance more of the home. Now, I will just be quite honest, at $350,000 being, you know, so I'm licensed on the East Coast primarily. Our average on this side of the country is around like $375,000 for a single family home. That is, to me, and this is also, and this is just going to be polar, but it is what it is, especially if you're a first-time home buyer. There are two groups of people that I help, okay? So if you are a single earner, you are by yourself, and you are having to make a purchase at the $375,000 range, you're probably a high earner. Like, I'm talking, the people that I talk to that single earners and that are purchasing right now are people like pilots, physician's assistants, nurses, engineers, project managers. They work in like high commission sales. I mean, these are people that I would say make above the average amount of money. The other group of people that I see that are jumping in and they're first time home buyers, it's a dual income household. Okay, so it's two people, it's not just one person. So the people that are buying solo are, I would say, above average earners, especially for their area. And then the other bucket of people that are first time home buyers are typically dual income. So two people, either serious relationship or married or engaged or partners, whatever the case is, and they are both contributing and they are both working full time. And I feel like at minimum, these people are making, so there's a data point that I have access to, and you can Google it actually for your area. It's the average median income for the area that you live in. Normally, when I have people buying together, they're making probably like over 100, like they're making often like 2x the average median income for the household. So like, okay, I'm just going to Google. So I live really close to Hampstead, North Carolina. So if you Google what is the median income in Hampstead, it shows an individual person is 42,500. Household is 90,000. So in my scenario, I would say that most of the time when I am working with a first time home buyer, so specifically here, people that are buying or able to purchase without like really stressing, their household is making at least the 90,000. Like that is, so if you ever want a point of reference, you can always Google what is the average median income for, and then the place that you live. The individual average median income for Hampstead is $42,500. Y'all, I would, just to be honest, be quite like shocked to see what somebody making that money would be able to buy right now on their own. It is very hard. Now, I do want to add a caveat to this, and this is not everyone, but if you didn't know, in the States, we are a very capitalist and consumer driven society. I mean, think of your own purchasing behavior. The amount of money that we spend on food, on shopping, on Amazon, y'all, car payments. I mean, I think the average car payment right now in the US is $750 a month. So even my dual income, the $90,000 in theory household, they both have cars that they've purchased probably within the past 2 to 3 years that they're making a payment on. The other huge element that works against us, in addition to rates being high and home prices being high, is spending behavior. And actually, here's a bit of the polar piece of it. The spending behavior is actually what prohibits most people from from comfortably being able to purchase. Because here's the reality, y'all. When you are looking to buy today, you cannot relate it to in 2020, in 2021. Prices were way lower, rates were way lower. That is not today. That is not where we are today. That is not where we are going today. And I think that a lot of this mess on the internet, there's just like clickbait, and it's just like to get your attention, it's like doom scrolling, right? But the reality is that there's no data to support there's a crash. There's no data to support that rates are going to bottom out. The reality is that what you see today is actually, I believe, the new normal. And what then that is going to require a lot of people to do is to be more disciplined on their day-to-day spending and their lifestyle. A lot of people I talk to are driving brand new cars that are $50,000, $60,000, $70,000. Those car payments are hefty. When you have two of them, they're super hefty. We get bank statements. I see how much money people spend on food, going out to eat, going to do these things. And listen, I am not here to judge, but what I am here to do is to give you some real advice if you want to buy a home. And listen, if you don't, good on you. Rent forever. I am indifferent to what makes sense for you as an individual person. But if what you want as an individual person is to own a home for your family, for the yard, for your dogs, for whatever it is that you want, this is the new normal. So instead of doom scrolling and running away from it, if you want to be able to buy, really what you need to do is have a conversation with someone, talk to someone, figure out what it would look like for you to be able to purchase, figure out what price point makes sense for you, and figure out based on that price point, what is going to be the monthly payment that's associated. Sometimes we count ourselves out when we don't need to, but other times we need a bit of a reality check and to know that this is where things are going to be moving forward. And that is the truth.